High-yield junk debt hits records again, and stocks are within striking distance of all-time highs as well. Trump urges Fed to cut a full point, reads the Wall Street Journal headlines, and I think there is some sense in that. And we'll examine the charts and see what the charts are saying. Silver hit a 13-year high. Gold is a little bit behind, but gold miners could be topping, so it's an interesting situation. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, June 6, 2025. As always, please hit the like button, subscribe to this channel, share this video, ask any questions you like in the comments section. If you're a subscriber, stay tuned. We have a very busy agenda for the members only video. We have market breadths, cryptocurrencies, crude oil, natural gas are going to be covered in the members only section, various ETFs, some of the foreign ETFs as well as bond ETFs, some of the large cap stocks, as well as some of the speculative securities, and quite a bit of gold related gold miners. If you're not yet a subscriber, consider signing up by going to the description link on MasterChartsTrading.com. We have multiple plans that you can select from, and also throughout the presentation I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red and yellow lines. So what are the lines telling us right now? We're looking at S&P 500, and S&P 500 was able to exceed previous highs for the move from May 19th. So this is a very strong move, really monster, that started on 7th of April and still seems to continue without abating. So far we've moved over 24% from the lows after the freak out in April, and now we're approaching all-time highs. So all-time highs are right there that were set on Wednesday 19th of February of this year, 2025. Now I still think there is a pretty good chance that we will pull back and at least close this gap, because, you know, as they say, the market hates vacuum, and this is a vacuum, and this is a pretty obvious gap between 9th and 12th of May. If we look on the 4-hour chart, so 4-hour chart just means that each candlestick is 4 hours worth of activity, so there's that gap from May 12th, and I just wanted to look at the price action from the last few days. So here on the 5th of June, yesterday, I thought that these were two topping candles, and in fact we had a follow through to the downside, but today basically everything got erased and we made a new high for the move. We closed that new high for the move, and this is a 19th of May previous highs. On this chart we also have the 28th of May previous highs. We don't see them on this chart because this is not a continuous security, but here we're using continuous security, namely ticker symbol US 500 from Capital.com. So we're seeing, you know, higher highs and higher lows. This is obviously good news if you're a bull. Is this resistance? It's possible. It's also possible that we will not fill this gap, you know, from May 12th and just make a new record first. Eventually, sometime in the future, we will fill this gap, but we just don't know if it's going to be in a month or it could be in a year. So no way to tell. So let's just kind of, you know, again, play it by ear. We're bullish. We're buying stocks. This was an actual alert for S&P 500 on May 2nd. I'm personally long. I have also several ETFs like QQQ. I bought QQQ. I'm still NASDAQ 100. I'm still holding it. I bought QQQ right before this giant gap that occurred on the 12th of May. I bought it on the 8th of May, so I'm sitting in the position. We're very close to record, so it's quite likely we will hit them quite soon. So we will be watching for new records. High yield bonds already hit new records. In fact, they hit new records a few days ago, and this week they continue to hit new records. So this is a bullish divergence where we have high yield bonds are hitting new records. S&P 500 has not yet hit new records, so a small bullish divergence between high yield bonds and stocks is a good thing. I think high yield bonds are highly correlated to the S&P 500. Notice this correlation coefficient is mostly positive. So when high yield bonds are hitting records, S&P 500 hasn't yet done so. Very good chances that stocks, S&P 500 namely, will indeed hit new records quite soon. So looking at this chart so far, we're pretty bullish, pretty optimistic. We're currently looking at 10-year Treasury note yield, and on this chart I wanted you to see this last 3 days of action. So 4th of June, 5th of June, and today the 6th of June 2025. So notice what happened. The yield was as high as 4.6% on 22nd of May, but was coming down for the past couple of weeks. However, it bottomed out exactly at this blue support resistance line and surged pretty strongly. So now we're looking at this as a potential strongish surge that might eventually hit new 52-week highs, but possibly even multi-year highs. Let me look for the 10-year Treasury note. So if we go above the January highs for this year, then we will continue towards 17-year highs, which were set in October 2023. So quite strong surge I see here. And note that I wrote here, this is a Wall Street Journal headline: Trump urges Fed to cut a full point. And when Treasury note yield is going up, by extension Treasury bonds are dropping in price, and you can see the inverse relationship here. So bonds could be in a world of trouble, especially the long dated ones, TLT, which tried to bottom around previous lows here from January of this year. But if we again continue with the interest rates as we are doing right now, we could see new lows for bonds, and obviously that's not a good sign, and new highs for Treasury note yield and Treasury bond yield. So this is not a good sign for the government, and we're trying to borrow another $250 billion because the latest budget is, I don't know, not really much different from previous budgets. It's still full of all kinds of they call it pork. I don't disagree. However, we have cut a miserably small percentage of expenditures. So government needs to borrow more, and if the interest rates are going up, then that's not a good sign. So Federal Reserve most likely will have to act pretty soon, especially if we break for the 10-year note yield, if we break above this January highs. That means we're going to be approaching the 5-year highs for the yield, and very close to multi-decade highs, because if we exceed the 17-year high that was set in October 2023, then we're on pace to get to even further, like highs that were set in 2007. That's obviously it's not a very big rate in a in a grand scheme of things, I mean, interest rates were significantly higher in the 80s. They were as high as 15%, but I think they were combating inflation here. So right now we have a weird situation where we have inflation going up and we have interest rates going up. So anyways, we will watch this pretty closely, but there is a very good chance that Federal Reserve will be forced to act relatively soon. By extension, once again, the interest rates were going up, and the treasury bonds, such as this IEF, treasury bond ETF, latest alert was on the upside. Right now we're still sort of in this uptrend, but we could, looks like we might be turning around, especially after today's action. So bonds will and are coming under pressure while interest rates are going up. Not a great sign for the huge government budget that's they're trying to pass right now. Let's look at dollar. So dollar currency index, DXY. I think it might be attempting to bottom here around previous lows that were set in April of this year. If it doesn't bottom here, then we could see a pretty significant move lower. And this could be, at the very least, this area, this height of this pattern, as I'm showing between the lows from 22nd of April and the low from the 13th of May, could be duplicated on the downside. So that's another, 4% down from today's price levels. If that happens, it would imply dollar. Most likely it would imply pretty strong inflation expectations, so maybe the interest rates lowering by Fed will trigger this drop for the dollar. If that happens, most likely gold will continue higher to new records. You can also sort of see an inverted sort of pattern that I just described for the dollar. If this inverted pattern indeed comes to fruition, then we're seeing and we see a breakout for gold above previous records, which was set on 22nd of April. So if gold breaks above 3,500, basically, we most likely will see a duplication of this pattern, and most likely we will continue higher towards around 39,000 to 3,900 to about 4,000 per troy ounce. So inflation definitely not a good sign right now, and Federal Reserve has obviously caught between a rock and a hard place, because if they lower interest rates, inflation will most likely go up, but if they don't lower interest rates, then the government cannot borrow money. So where do you go from there? Very tough situation. Silver already hit a 13-year high, so I'll show it to you on a weekly chart. Here's silver. So looking back, the prices haven't been this high since 2012, around 2012. And that's also a sign of potential inflation. However, silver also is used in industrial processes, so it's also possible that perhaps some industrial growth might be in the cards, although difficult to say at this point. So silver already hit 13-year highs. The only thing that I'm a little worried about is this action on gold miners. These are actually 52-week highs. In fact, let me see if they're not multi-year highs. Oh yeah, they're multi-year highs. So we haven't seen again these prices for gold miners since 2011. So that's 14-year highs for gold miners. On the weekly chart, we're looking at this chart on the weekly time frame. This is GDX. This sure looks like a potential shooting star. However, it isn't all a multi decade high, so maybe we'll pull back a little bit, but I wouldn't expect. I'm not sure, honestly. It could be like just a very short-term pullback, and it could be most likely an opportunity to buy gold miners. It will all really depend on the dollar. If dollar does not hold the support from April 21st and continues lower, then all bets are off, and gold miners clearly will benefit. Some of the gold miners really strongly popped this week. Let me just show you at least one. There is this one, SBSW. Sybane Stillwater is a gold miner, so notice how strongly it moved. I mean, it could be tapping, but it's still a very strong move. So yeah, we're trading gold miners. You can see we have like 8 gold miners that are going to be on the members only video this week, so stay tuned if you're a subscriber. And that's it for this week's recap. If you are interested in seeing more, so I'll be covering again lots of various securities, for example, cryptocurrencies, Solana, Ethereum, Bitcoin, oil, natural gas, various ETFs, and foreign ETFs, as well as large cap stocks and speculative securities, and lots of gold miners this week will be covered in the members only video. So consider signing up for the newsletter. This is a newsletter that I'll be covering, and the video comes out in the newsletter format. Trading indicators are these lines on the chart. Again, you can get them on your chart, this green, blue, red, and yellow line. All you need to do is go to my site, MasterChartsTrading.com, sign up there. Once you sign up there, come back, and you will need a free TradingView account. So TradingView.com is a free online interface, so open an account there. Also open an account on MasterCharts Trading. Once you do that, I will open the door for you, and you will see the charts, the same indicators on your chart. The best deal, of course, to get both trading indicators and newsletters, and I have a yearly subscription and I have the monthly subscriptions as well. All plans come with a free 7-day trial, so no risk. You can sign up, and then if you don't like it, feel free to cancel. But of course, I have lots of subscribers who stay with me and do not cancel for many years. That's it for this week's recap. Again, please don't forget to hit the like button, subscribe to this channel, share this video, make a comment in the video. This is what keeps this channel going. Thank you for watching, and have another great trading week. Bye-bye.